Christina Brazier. I'm the Operations Director at Travel, and I've been joined again by our panellists, Matt Purser from Travel Trade Consultancy, Adam Pennyfather from Travel Trade Consultancy, and Farina Azam from Kemp Little. Our format will follow previous webinars where I'll ask some of the panellists to provide us with a summary on the latest developments, and then we will move on to Q&A. As before, to manage the call effectively, all attendees will be muted, but we do have the Q&A function on the Zoom app if you'd like to ask any questions. There's also a chat function, but please don't use that for any questions as it's quite difficult to manage both at the same time. We'll also be recording the call and we'll circulate afterwards to anybody that is interested. So first of all, we will hand over to Matt Purser to update us on the latest developments in the industry. Matt?
Thanks, Christina, and good afternoon, everyone. Just wanted to give you an update really of, first of all, around the Package Travel Directive and the effort that's been made by the industry to try and get that updated around the refund credit notes. As you probably would have seen from ABTA's notes that they put out a few weeks ago, they were quite bullish and quite confident of getting this changed. I think they're getting frustrated by the length of time it's taken for government to sign off on this. So as we sit here today, it's still not been signed off, and they don't think we'll hear anything this week. So we're all sort of crossing our fingers, hoping that we'll hear something next week on that. Their advice remains unchanged around that, which is that they would recommend that people still go down the refund credit note route, but they're maintaining pressure on government around changing the Package Travel Directive. They're also putting pressure on the CAA in the UK and its European counterparts around Regulation 261. And so for those of you who don't know that regulation, that's around denied boarding by the airlines. So what the regulation says is if the flight is cancelled, then a full refund is due to the customer. And if that also happens within a 2-week period before they're due to travel, then they're also entitled to compensation as well. As many of you will know, the airlines are again going down the refund, not going down the refund route. They're actually using the voucher scheme themselves. So there's pressure on that side as well, because if the Package Travel Directive doesn't get changed and refunds are due, then that's got to work all the way through. So that's still as where it is, but ABTA and everyone else is keeping up pressure on government to get that changed. And obviously, as soon as we hear anything else, we'll let you know. I guess one question we keep getting asked is around the refund credit notes, whether that's a legal thing to do. Obviously, until the law changes, then it's not. And so therefore, it's in breach of that regulation. I don't know if Farina will be able to comment on this afterwards, but some of the comments we've had is that it's not a break in criminal law, it's a civil law case, which means that any customers who choose to take you to court on it would have to be a civil action against you on that. I thought it might be useful to also share what's happening in the rest of Europe. So we were on a call earlier this week with some lawyers around the rest of Europe. Quite different stances that each country has taken. So as we understand it, Spain is going down the route of tour operators are refunding customers in full. To the other extreme in Germany, where everyone is being issued with a credit note, and the difference between their credit note and what's been proposed in the UK is that those credit notes are not financially protected. So the UK is going a step further, which should give people comfort, really. So that's what's happening there. The other bit that obviously everyone is concerned around is about chargebacks. So we've been looking at Visa and MasterCard and Amex rules, which basically the merchant acquirers have to adhere to. So that makes it clear on there, and it's always been their stance, is that chargebacks should be the last port of call for customers to go down. So in this particular case, you'd expect them to be exploring the route of travel insurance and coming up to an agreement with you as tour operators around credit notes before they even get into the discussion around chargebacks. MasterCard's stance is definitely around the fact that chargebacks, even in a credit note situation, should not necessarily be pushed through. They really want to work with merchants to actually accept those credit notes and therefore not implement a chargeback. I think, reading between the lines, if the package travel directive does come through, then MasterCard will insist that is accepted, and therefore no one would be able to do a chargeback at that point. So I think it's even more important that those that PTD gets changed from your side of things. And the last thing I just wanted to touch on, which again we'd been asked a bit around, was around September renewals for those that are renewing ABTA, ATOL, Travel Vault, other forms of protection in September. I think everyone recognises that this needs to be looked at. Most of the accounts that come through for those renewing in September won't take into account this situation. Their financial year end would have already have finished. So there is conversations that are about to begin about how that should be looked at as part of the renewal, what information would be required, and what those requirements would be going forward. I think most people expect there to be some change on there, thinking that the current rules can't apply after what we've gone through. So that's all I wanted to cover off from the regulatory point of view. I know we've got Adam on the call from Travel Trade Consultancy as well, who's going to cover off some updates we've got on the coronavirus business interruption loan scheme, or CBILS as it's been shortened to. So Adam, I'll pass over to you.
Thanks, Matt. Good afternoon, everybody. Yeah, as Matt said, it's been a week or so now since the CBILS scheme was launched. And we've seen a few applications go in and actually some traction start to come back on those now. So what I wanted to do today is just share some of the information that we're seeing. So if you are applying or thinking of applying, hopefully it gives you a bit more of an insight into what you need and what we're seeing come back. I think firstly, and I have seen an article today, I think, where the Chancellor is going to announce some further reforms on some of this. And so what I'm saying may change. But certainly last week there was a lot of media interest around the security. And so some of the banks were asking for personal guarantees across the board. There were a few that weren't, but the big four banks have now said that they won't require a personal guarantee for loans up to 250,000. If you do need beyond that, then they are required at the moment to look at what other security you have. And so that may be for other assets because they can't take, the personal guarantee can't include your private residence. And so what we're seeing other banks look at the moment is other unencumbered assets. And so that might be a investment property, for example. And so they could take a specific charge over something like that or other assets you might have. But that's certainly beyond the 250 mark. Below 250 seems to be, less restricted in that way. So that's good news. In terms of who you can apply for, last week we were certainly seeing, and still are seeing in most cases, that it's only really your current banking provider that are looking at cases for now. Although today we have seen an application go into Clydesdale Bank. And so what we've experienced with some clients or members is that you may have a private bank that's not part of the scheme currently, and so you're looking for a banking provider that is part of the accredited scheme. Most of the doors are currently closed, but certainly we've seen the Clydesdale Bank is open, so that's something that people can look at. In terms of information, if you are looking at it, what we've seen come back on applications so far, you definitely need some of the things we spoke about last week. So management accounts, your latest financial statements, a business plan would need to be included. Even though they're not looking at personal guarantees, we are seeing the lenders ask for personal information. And so in most cases, you need to fill out a personal income and expenditure and asset form. So be prepared to have that kind of information. It's even looking at, what life policy you have. So you may need to kind of dig that information out. And lastly, there is a huge emphasis on cash flow. A 12-month cash flow is what's been required in most cases, and the cash flow has to support the amount of loan you're looking to borrow. And so we were looking at cases and trying to strike a balance when presenting this to lenders. What I mean by that is demonstrating the amount of cash that the business might need, but also being able to demonstrate, a viable business coming out of this crisis and being able to afford to pay that back. And what we've experienced so far is, lenders wanting to see, what the worst case scenario is. So, what is your trough in cash? And with some headroom on top of that, that is what they're going to initially look to borrow. What they have said is that there is no reason, if you're looking for a bigger loan, there's no reason why you couldn't come back in a month or so's time. And so the current scheme is running until September. And so there's no reason why you couldn't have, 1, 2 or 3 loans. But I think to manage workflow, they're looking to get these to turn around as quickly as possible, lend what they need to lend, subject to criteria. But then if you do need to come back because your assumptions were incorrect, then there's nothing stopping you from doing so. In terms of what we are seeing come back, we've had some indicative interest rates, and they are quite varied. In terms of other terms, we are seeing lenders go to the 6-year maximum, which is good, because previously we heard from some lenders they might restrict it to 5 years, but actually we're seeing 6. So I think that's really positive. We're seeing 6-month capital holidays alongside the 12-month interest holiday, not 12 months of capital. And the indicative rates we've seen back so far are quite varied, actually. So we've had 3% come back on a relatively small loan, so up to the 250. But we've also seen interest rates up to 6.5%, 7% as well. So quite a range, but just gives you a bit of an idea as to what to expect, really. So that's it from me, unless anyone has got any questions. I'd be interested to see if you are applying what you're experiencing as well. But yeah, happy to answer any questions on that.
Thanks, Adam. We've had a couple of questions in. I'll just start on the CBILS to begin with. One of the questions, based on what you've been saying, is how can businesses present a 12-month cash flow when they've got no idea when the revenues and cash will start again? It's a bit of a $64 million question at the moment.
Good question. I think it depends on what your product is and what your view is, really. What we've presented, and there's been no pushback, is a range of 3 to 6 months. So the minimum being no revenue, no generation of revenue for the next 3 months, and then really a real kind of gradual incline from that point. And so, we're looking at one yesterday, so that, as a base case, expecting August to be at 25% of prior year, and there's a steady incline. But actually, over the course of the financial year for that particular client, they never breached more than 75% of prior year. And so overall, they're looking at half in their business year on year. I think it is largely dependent on what you're selling. We've got some ski operators that are quite confident that next ski season could be, booming, where there's some pent-up demand. But, other people that, not quite so confident. I think it's important just to have a reasonable assumption in there for the lender. If you imagine, a credit committee looking at this, they're going to, obviously want to see what you need to borrow now. But as I said earlier, I think it's important to demonstrate, some reasonable assumptions around that, just to show you've thought about it, but also demonstrate that the business is, potentially going to start to generate some cash in the future to pay the loan back.
Thank you. And you talked a little bit about interest rates there. Do you know how the interest rate is decided on by the banks?
I don't know if I knew that either. Yeah, unfortunately, I don't know. It is up to their own internal team. Obviously, they are on risk for some of it, and so it'll be down to their own appetite and how they view the risk of the loan. to what interest rate they come up with. I don't believe there's any restrictions on what they can or can't charge. I have seen some horror stories, but haven't seen them firsthand yet.
Okay, and in terms of what the amounts that people are applying for, do you have any idea of what sort of figures are being accepted based on your turnover or profit, or is it very much on a case-by-case basis?
Case-by-case basis, and it varies widely because it depends on how much you've been impacted, what your cash generation was like before, and so we've got businesses. From kind of up to about 5 million applying for varied loans, up to 250 and slightly beyond. We've got some £10 million businesses there or thereabouts. Some applying for £1 million, some going for £500,000. But that's all very dependent on largely dependent on what they view as how long this is going to go on. But also how agile they've been in the current crisis and what they've, if you've managed to cut your run rate right down and you're, fortunate enough to be able to take advantage of some of the other government aid, then you may not be required to borrow as much. Whereas if you've got a huge fixed cost base that you can't cut back on, then it may be that you need to borrow more. There are differing opinions as well, depends on, how much you want to take on. We asked that, so all of the loans that have come back so far don't have any early repayment charges. And so what we've seen some clients do is take a little bit more than they perhaps might need, just in case this crisis goes on a bit longer, but with the view that actually, well, there is no repayment, there's no consequences for repaying this early. And so if things do start to pick up come, autumn, then, they will essentially look at repaying that as early as possible.
And do is it generally a yes or a no answer from the bank, or can they come back with a counter offer?
So at the moment we've just got indicative rates come back. The ones we've had to go back and answer some questions on all of them, and so there are only indicative offers at the moment that came in over the weekend. And so I can't give a firm answer on that yet, but it's certainly. The bank, in all examples, have engaged with the business and came back. So it's not a computer yes or no answer. There's certainly some engagement initially and some questions around what you've presented.
That sounds reassuring then. Nobody likes the computer says no approach.
There are some humans involved, which is is always helpful.
And we've got a couple of questions actually on other financial support measures being introduced by the government. So this is not the CBILS, but so somebody's asked, what about the grants, not loans for small, medium enterprises? Okay.
So yes, there are grants available. You've got the small business rates relief. So that's up to £10,000, obviously operated through the rate scheme, and so we understand with that the first tranche of money has gone to local authorities last week. If you qualify for that, you'll be contacted directly by your local authority. If you do qualify for small business rates relief, then I would still say get in contact with your local authority just to make sure you're on the radar. There is the next grant is the £25,000 grant. Now that's for retail, leisure and hospitality, and so if you don't have a shop front, I don't think that tourism is going to fall within that definition. And so if you're a tour operator or travel agent operating from an office, then I'm not confident that you would qualify for that.
Okay, thank you. And with regards to the business rates relief, do you need to have a shop front for that, or is it different criteria?
No, so it's not limited to retail, leisure and hospitality. So that's where I think the shop front comes in, that you could potentially fall within the first element. It's just where you operate through the rates relief scheme. So if you've got an office and you qualify for small business rates, then you could be eligible for that £10,000.
And the best way to seek information on that is to speak to your local authority?
Yeah, so that they were going to be instructed with further detail. and so I'm not quite clear yet whether there's any further eligibility criteria. But that was happening early April, and then they're supposed to be in contact with businesses that are affected.
Okay, thank you. And we've had a question on the furloughing scheme that the government introduced, and a director's asked, can a director furlough themselves? Yes,
you can, but you can't work technically. You can only undertake your fiduciary duties, and so you can't essentially be working as you probably would be.
Great.
And also it would be based on your currently based. I mean, I'm expecting some changes with this, I think, in what the Chancellor is going to announce over the next 24 to 48 hours, I believe. But at the moment, it would be based on your salary as of the 28th of February. And so if you've got, quite common what we're seeing is with owner-managed businesses, you've got directors that are on a combination of dividends and salary. Quite often that salary is quite low, and it would only be 80% of that amount, not including the dividend.
Okay, understood. Thank you. And we've had a question about corporate law. So I don't know, Adam, if you may know the answer, or potentially Farina might ask you to come in. So one of our attendees has heard from other businesses that in corporate law, you cannot favour creditors. So if you can't afford to refund all customers, you shouldn't refund any. Would this law supersede the PTRs for refunds in COVID-19 cases?
I'm not quite sure. I wouldn't want to commit to that. Yeah, not being a lawyer, I don't want to throw you under the bus, Farina, but I wouldn't comment on that entirely.
That's fine. Farina, do you have any knowledge on that at all, or if not, then we can come back to everybody and find out the answer?
Yeah, I mean, it's not my area in particular. It is a corporate law question, and I actually have seen some materials doing the rounds at my firm on this particular point, so I can send those over for us to send over after this webinar. But I think probably what you're talking about there is wrongful trading, in terms of if you know that you can't meet the liabilities of the business, should you continue trading, which I know that particular area of law changed today to say that you legally would be able to continue trading to try and find a rescue deal. I mean, it is right, as in, one creditor won't supersede another if they're all sort of considered unsecured creditors. I don't think it's a PTR issue as such. I think it's basically an insolvency issue, a solvency issue, whether the company can meet all its liabilities or not. But I am not an expert in this area, but we do have a team that is, so I can certainly dig out some of the things that they've been sending round to send over to you, Christina, for you to send on to members.
That'd be great. Thanks, Farina. And just moving back to Adam, sorry, I will give you a break in a moment. We've just had a question on the furlough scheme again. So if staff are furloughed, I'm probably saying that incorrectly, by the way, the 80% covered by government is the loan, or it will be covered by them. But from a practical point of view, when and how does that get paid back?
So it's not necessarily a loan. I mean, I'm not quite sure on the question, but so the way it's going to work is that the government, so you would need to pay out as the employer the 80% up to a maximum of 2,500. Then you would get the money back. There is an indication around, not necessarily a payback, but national insurance being changed in the future that I think will end up funding some of these schemes. But there isn't a direct payback for the job retention scheme.
So it's not, we're still waiting for details on that, basically. So there's kind of like the indication that this is how it works, but from a practical point of view, employers aren't actually sure how they will get that 80%.
So it's going to be paid back to you by backs, but at what point we're quite unsure. So that the mechanism is going to be released, which is an online portal this month. But as anyone knows, if you undertake any kind of tech project, they never run on time, so I would be surprised if it does get released in April. But yes, the plan is that the portal would be released. You would then register as the employer all of your furloughed employees, but you would need to run your payroll as you normally would, except for those that were furloughed would be paid 80% up to a maximum of 2,500, and then the government would reimburse you for that money. Again, it should be April, but I wouldn't be surprised if it pushed into May.
Okay, thank you. That's helpful. And can people rotate staff members when furloughing?
Yes, this is something that is, I think, will change in the coming days and was being reviewed. But at the moment, I believe the furlough period is set for a 3-week period. And so there is no reason why you couldn't furlough somebody now, take them off and bring somebody back into the business to work and essentially unfurlough them.
Thank you. That's really helpful. Matt, we've had a specific query for you just to clarify one of the points that you made on chargebacks. So I'll ask the question directly. So with regards to chargebacks, and just to clarify, I assume you mean debit card transactions rather than credit card. We're under the assumption that credit card transactions are covered under Section 75 of the Consumer Credit Act, meaning the retailer and the payment processor are equally liable to provide the goods, and failure to do so allows a reclaim from either. We assume any change to the Package Travel Directive won't affect the Consumer Credit Act.
Yeah, so what we're talking about here is specifically chargebacks. So the difference between a chargeback and Consumer Credit Act is the chargeback is not a legal protection. It's not a piece of legal legislation that puts that in place. It's something offered by Visa, MasterCard and Amex. So Visa, MasterCard and Amex are the ones that decide whether or not that rule is still applied. And so they're the ones that are keeping a close eye on changes to the Package Travel Directive. The Consumer Credit Act would still remain in place, so I don't think there's any ability to stop that. And that enables people to claim back under Section 75, basically allows them to claim back for any payments that are made over £100. But that payment has to have also been made directly to the tour operator. So if your customer's paid by credit card to an agent in between, then they're not able to use Section 75 as a way of claiming. It has to have been paid directly to the tour operator. I think that the hope is that if the Package Travel Directive is changed, then there is more chance then of customers accepting the fact that a refund credit note is a way of dealing with this money that they're owed. And I think that's what's really being pushed through.
Thank you. And I mean, some of the feedback we're getting from members is these ongoing issues with suppliers, and particularly airlines now kind of issuing credit vouchers instead of refunds. What have you seen in terms of like the timescales on that? One of our members was saying that the airline that she was using was the time limit was the end of December. Is that quite common, or have you seen them go further than that?
Yeah, so I'd seen a real wide range, really. I'd seen Eurostar only offering them up to, I think, November originally. So there'd been a real wide range of vouchers that had been issued. I think the issue around that again is this regulation that applies to the airlines, which is this Regulation 261, which clearly, and this is a piece of European legislation, which clearly states that if your flight is cancelled, then you're entitled to a cash refund. Now that cash refund you would expect to then go back to the operator, who would then either refund it back to the customer, or if the customer wanted to rebook, it could then be used for them to rebook. I think the problem with the vouchers as they are at the moment is that, one, are they going on long enough? And I think the problem around that is no one knows how long this is going to last for. I think most of the ones I'd seen have a date in which you need to have booked by, but the actual travel date was a bit more generous than December this year. But I think the other issue as well is that some of these refund credit notes by the airlines are only being given in the name of the customer, and so the tour operator is not being allowed to transfer them to another booking if that customer didn't want to travel for some reason. So, and this all is in breach of this regulation 261. So, you know, if tour operators are being hit over the head with the package travel directive, the airlines should be being hit over the head with the regulation 261 as well. So I think there's a feeling at the moment that everything is sort of being held on the shoulders of the tour operators, and no one else is playing game with it. So I think they've all got to be looked at, which is why ABTA specifically are putting pressure on CAA and the rest of Europe about looking into this regulation for these European airlines as well.
Just on EC 261 as well, another one of the issues with it is the fact that it can only be enforced by the passenger, by the customer. So it isn't something that, you know, obviously tour operators can refer to it and mention it and talk about it, but it's actually the passenger that is the one who has to enforce it against the airline. It's a piece of consumer legislation. So it's a bit of a tricky one where you have sold a flight as part of a package, you know, and the customer is you know, their rights are against you under the PTRs, but then they do have this additional right under the under EC 261. But it is a right. It isn't something that a tour operator could enforce against an airline. It's for the passenger themselves to enforce against the airline, and so that's a bit tricky as well.
Thanks, Verena, for clarifying that. We've had a couple of questions actually specific to travel vault issues. One is around the insurers and whether the current climate is leading to a tightening of the rules. I mean, we have seen that insurance have obviously been impacted not only by Corona, but also by the failure of Thomas Cook last year. But from our discussions with insurers, they are still taking on renewals and new business. But what we can say is obviously that the assessments that they are doing are extremely thorough now and are taking a lot longer. So if you have a renewal coming up, then we would strongly recommend that you send your information and the application into us as soon as you can, so that we can provide as much information as possible to our insurers. We do have a few available to us, so we have options there, but it can be a longer process at the moment. Matt, I don't know if you've got anything to add to that.
Sorry, I was muted there. Yeah, no, I think you know, at the end of the day, these insurers are, some of them are more travel specific than others, and so, you know, they've been in the travel industry for a long time and have supported the industry for a long time. So I think they will reassess their current book and reassess their criteria. But in terms of shutting up shop, then yeah, that's not something we've heard of.
The other query we've had from some of our members is just to clarify what happens when existing bookings are amended or if credit notes are issued. Just to clarify that if you have already reported a booking to us and that's been declared to us, you won't be charged a new premium on that booking if it's transferred. It can get transferred across to an amended booking. You would just need to provide us with details, and we have sent emails to all of our members with a booking amendment sheet so that you can do that for us as part of your monthly process. But if you've got any queries on that, please give us a call and we can take you through it. But you can rest assured that as long as the price to the customer remains the same, you won't be charged a new premium for any amendments. Do any of the panelists have anything else they'd like to add at this stage? I think we've covered all the questions.
No, I haven't got anything from my side.
Not from me.
No.
Well, that's great. Thank you very much to all of you for inputting. We would like to continue with future calls for our members. We've had some great feedback that it's been really helpful. If you have if you would like any other support or advice in other areas, then please let us know. We'd be happy to arrange for other panelists to join and offer any advice that you need. And also, we know that everyone is under extreme financial pressure at the moment, and we are here to support you. If you have any significant financial concerns that you need help with, please get in touch with us. And we're here to support you through that and to give you any advice that we can. But for now, thank you all for your questions. Thank you for attending. As I said, we have recorded it, so we will circulate it to everyone afterwards. But thank you very much.
Thanks, everyone.
Thank you. Bye.
Thank you.